think there is some risk that we could fall to as low as 65 cents in the second half of next year.
Ray Attrill, welcome to the business.
Thank you.
NAB has downgraded the outlook for the Australian dollar. What are the reasons?
Well, the main reasons are that we think that the US dollar is going to remain a very strong currency for some time to come. And together with NAB's view that we're probably not going to see another interest rate rise here in Australia, but the risks are that in the US we may see an interest rate increase in the coming months. That does play to the Aussie dollar suffering from that shift in interest rate differentials. But even if, there is a good chance that the Fed will tough it out here and continue with a period of unchanged interest rates. If that happens, maybe we see the Aussie dollar at least getting back above that 70 cents level in the coming weeks or months. But our earlier forecasts for Aussie getting as high as 75 cents this year, we now think look out of reach, given the lack of risks we think around the RBA lifting interest rates. So it's really sort of going into next year where we do think that spare capacity open up in the Australian economy, the impact of lower house prices and now falling oil prices bringing inflation down could create the conditions for the RBA cutting rates next year. And in fact, we have 75 basis points of cuts in our forecasts. And against a backdrop where US interest rates are unlikely to be coming down, which is why we think the risks are that we'll go down towards the mid-60s as we go through the course of 2027.
Okay, so put it into numbers for us. What's the base case for the Australian dollar to hit and by when?
Well, the base case is that we are going to get back up to, the low 70s, but not much above 70 during the second half of this year. That does depend on the US dollar not continuing to strengthen from here, but it's really next year where those expected RBA rate cuts start to come into focus. And on that basis, we've got a point forecast, if you like, for Aussie against the US dollar down to around 67 cents by the end of the year. But as I say, that's a point forecast, and you really need to put a range around there, which is why we think there is some risk that we could fall to as low as 65 cents in the second half of next year.
There are risks on the other side, though. If the RBA, for example, lifts interest rates, markets are pricing in a 50% chance of a hike from the RBA by November, or US economic data continues to disappoint.
Yeah, no, but in that situation, we would probably think that Aussie will probably exceed our new forecast for Aussie only getting back up to around 70 cents. But we're not really thinking that those US labour market numbers that we had last week were particularly weak. The US labour market still looks pretty stable. They've still got an inflation problem, and we don't know whether the Fed under the new President Walsh is actually going to be putting his hand up, if you like, to say we need to be raising interest rates. So despite slightly softer numbers, we think overall US economic exceptionalism is here to stay.
Can you explain to us what you mean by US exceptionalism? And I mean that in the face of, we know there's some sort of cracks in the AI story, worries about AI overinvestment.
Yeah, there's certainly worries there, and I think, but were we to have a meaningful correction in US equity markets led by, the technology sector, in that sort of a risk-off environment, the Aussie dollar would typically tend to suffer, and the US's sort of safe haven attributes would tend to come to the fore. So when we talk about exceptionalism, we're really talking about the fact that the US economy, we're coming out of the other side, or at least we think we're coming out of the other side of the Iran conflict. And incoming economic data generally is showing that the US is outperforming not just Australia, but most of the rest of the world. Its financial markets continue to be the go-to place, despite all the concerns that have been expressed about so-called, de-dollarization. But as long as its economy continues to outperform, then we think that capital will still flow to the US, and under those circumstances, the US dollar is likely to remain a strong currency.
Ray Attrill, thank you so much.
Pleasure.